Chime Bank recently came out with a new secured credit card, their Credit Builder Visa Secured Credit Card. And this secured credit card is a game changer. It works fundamentally different than literally every other secured credit card on the market. I mean, secured credit cards are usually pretty much just trash. First, you have to put up that security deposit, and then they charge some ridiculous interest rates. They typically don't have much, if anything, for rewards, and they can sometimes charge an annual fee for no apparent reason. Like, they're just garbage. But Chime Bank is a fintech company, a financial technology company. And what these fintech companies do is they come in with fresh thinking, fresh new ideas of how to disrupt established industries. You know, sometimes we sort of get in this mundane habit of, well, this is the way we've always done things, and so things sort of become the status quo when realistically there's better ways to do things. And that's what Chime Bank has done with this new credit card. So like I said, this credit card works fundamentally different than every other secured credit card on the market. I think they've got a real possibility for a big winner on their hands. And I really think that this new method is going to catch on, and a lot of the bigger banks are going to start trying to mimic this example that they're setting. Now, it does have one or two minor drawbacks, which we'll get to later in the video, but hands down, this is going to be the best secured credit card for 2020. Now, before we get into the details of how this Chime credit card works, we first have to understand how a traditional secured credit card works. And maybe you already know how a secured credit card works if you've been trying to build or rebuild your credit. Typically, a secured credit card is for people that are new to the credit game, or maybe life threw them a curveball and something happened and their credit score has suffered because of it, and now they're trying to raise their credit score back up. So with a secured credit card, traditionally, you have to put up a security deposit. That's why it's called a secured credit card. Now, these security deposits typically range anywhere from about $200 to $1,000. We'll just say $500 for this particular card. So what you would do then is you would give this credit card company $500, and they would just kind of tuck it away somewhere. It would sort of vanish off into the abyss, never to be seen again until you don't want this credit card anymore, or until they upgrade you to a non-secured version of the credit card. And then in return for giving them this $500, they will then issue you a credit card, and the credit limit is typically equal to your security deposit. So they'll give you a credit card with a $500 spending limit on it. So let's say you go out and you buy $100 worth of stuff. They're not going to just take that $100 out of that security deposit. That security deposit stays off to the side, never to be seen again, like I said. So at the end of the month, they're going to send you a bill for that $100, and then you have to pay that $100 back as well. And so it kind of stinks because it almost feels like you're paying twice. You got to pay this big upfront cost, the security deposit, and then once you make a purchase, you also have to continually pay that balance off as well. And if for whatever reason you don't pay off this $100 bill at the end of the month like you were supposed to, they're going to report this non-payment to the credit bureaus, and that's going to actually lower your credit score, which defeats the whole purpose of getting a secured credit card, which was to rebuild and reestablish your credit score in the first place. That was the whole point of this. In addition, what happens if you want to make a purchase of $600? What if you want to buy a laptop or something like that? If your credit limit is $500, then it's physically impossible to put a $600 laptop on that credit card. It just can't be done. So realistically, you can only use this secured credit card for small purchases, which may not be extremely convenient for you. But the Chime Credit Builder Secured Visa Card works fundamentally different. So the way this credit card works is you first have to open up a spending account with Chime Bank. So this would basically be like a normal checking account, just a bank account with Chime Bank. And then after you open this spending account, then you can apply for their secured Visa credit card on top of that. So basically the way it works is instead of needing to put up a security deposit that just gets tucked away, never to be seen again, What you're going to do is you're going to transfer money out of your spending account and move it over into this separate account known as a credit builder account that's going to be linked to your secured credit card. So let's just say that you move over $500 from your spending account into this credit builder account. Now, at that point, your Visa card works basically just like a debit card or a prepaid card, which is much more convenient for most people than a secured credit card is. So basically the way it works now is if you moved over $500, now your credit limit for that card is $500 for that particular month. Now if you go out and make the same $100 purchase, they are not going to send you a bill at the end of the month. Instead, what they're going to do is they are simply going to automatically take that $100 out of this credit builder account that you had. So you had $500 in there, they are automatically going to take out 100 of it. So now you got $400 left in this credit builder account. So that means that next month you could spend $400 on this credit card. Or you could simply just transfer money from your spending account over into this credit builder account at any point that you want. And so that credit limit is going to vary depending on how much money you put in for that particular month. And so like I said, this is fundamentally different. Instead of tucking away a security deposit never to be seen again, you're basically just prepaying all of your credit card purchases. You're moving money from your traditional checking account into this special credit builder account, and then as you spend money on your credit card, it's going to automatically lower the available balance in this credit builder account. So it's going to lower that credit limit with every single purchase that you make. And this is significantly better for a couple of reasons. Since this card is acting basically like a debit card or a prepaid card, it is physically impossible to go in the negatives. So if you're one of those people that you don't necessarily trust yourself, you think you might rack up big bills and just not be able to pay it off or something like that on your credit card, it is impossible to go negative with this card since you are prepaying all of it. In addition, since your credit balance is whatever amount that you transfer for that particular month, that means that if you wanted to make a bigger purchase, if you wanted to buy that $600 laptop, just transfer $600 from your spending account into this credit builder account and then use your credit card like you normally would to purchase that laptop. And finally, since they are automatically taking that money out of your credit builder account as you spend it, that means you're never getting a bill at the end of the month, a statement. So if you're never getting a statement, then it is physically impossible for you to miss a payment because they're taking that money out automatically. And since it's physically not possible to miss a payment, that means it's physically not possible for your credit score to drop. Your credit score has no choice but to go up month after month after month, because every month when they automatically take out that money out of your credit builder account to pay off your charges that you made for that month, they are reporting that as a on-time payment to the 3 credit bureaus, which is going to help your score. Now, a few common questions that get asked. No, this credit card does not have an annual fee. In fact, it really doesn't have much of any fees because since your balance is automatically paid in full every month, then you're never carrying forward a balance from month to month where you're going to get charged interest. So it's physically not possible to get charged any interest for this credit card. In addition, this credit card does not require a credit check when you sign up for it. So if you're somebody that's worried about a hard inquiry appearing on your credit report to, ding your credit score a little bit, which is going to automatically lower your credit score, this credit card is not going to pull a credit report for you when you sign up for it. Now, while this credit card is not technically guaranteed to be approved to anyone who applies for it, I find it very, very difficult to imagine a scenario where somebody would actually be denied for it. I have not been able to find any data points of somebody that has applied for this credit card and has not actually gotten it. because they're not going to do a credit check for you, and you're automatically going to be transferring money into this account. So it's still a secured credit card in that regards. So it's virtually guaranteed. I guess it's one of those legal things where they don't want to technically say 100% of the time you're going to get approved. But realistically, you're going to get approved for this credit card regardless of what your credit score is. And lastly, there's no preset credit limit. Unlike most secured credit cards where your credit limit is equal to your security deposit, with this credit card, your credit limit varies from month to month. It just depends on how much money you transferred from your spending account into this credit builder account. Now, there are a few downsides to this credit card. It's not a 100% perfect credit card, but I think the downsides are very, very minimal for what you're actually getting with this card. Now, the first downside is that there is no reward system with this card. So there's no cashback or points or anything like that. But the overwhelming majority of secured credit cards don't offer any kind of rewards anyway. And the very select few secured cards that do have rewards offer terrible rewards. In my opinion, you are much better off with the guaranteed boost to your credit because there's no possible way to miss a payment. It's better to simply increase your credit score and apply for a significantly better non-secured rewards credit card than it is to ever try to mess with one of these crappy secured credit cards that does have rewards. Just increase your credit score to the point where you can start applying for actual good, legitimate credit cards instead. Now, the second thing of note that may or may not be a downside depending on how you look at it is since this card does not have a preset credit limit, your credit limit is effectively how much money you transferred over into your credit builder account every month. Since it does not have a preset credit limit, credit utilization rates will not be reported to the 3 credit bureaus. So typically, part of your credit score is calculated by your credit utilization rate. The lower your utilization rate, the better. So hypothetically, if you had a $500 credit limit and you maxed it out and spent $500 on it, you would have used 100% of your credit available, and that's bad. That's actually going to hurt your credit score. But if you had only used $100 instead, 100 out of the 500, that's a 20% utilization rate. So that actually might help your credit score a little bit. Now, with these secured credit cards, since the credit limit is so low, it's really easy, even by just putting a couple of purchases on a secured credit card, to have a really high utilization rate, which could theoretically hurt your credit score a little bit. But since this particular Chime credit card does not have a preset limit, it's simply not going to report your utilization rate at all. So that might actually be beneficial for you, it might be hurtful, it just depends on how your normal spending habits would have been. Now, possibly the biggest downside for this Chime credit card is that you have to have this spending account already with Chime Bank. So you have to become a customer of their banking ecosystem before you can even apply for this credit card. And you have to have at least $200 direct deposited into your spending account every month in order to qualify. Now, most people, if you're going to be direct depositing money into a particular bank, like that's going to be your main bank, right? So you're not going to be using Wells Fargo or Chase or anything like that. If your salary from your job is getting direct deposited into Chime banks, then realistically that Chime Bank is going to be your primary bank. And that may or may not be a problem. If you like Chime, then that's great. It's fantastic. But what happens if you really like Wells Fargo, or you like the convenience of having a physical bank that you can actually walk into, talk to somebody, talk to a teller if you have a problem? So while in some ways it's really smart of Chime Bank to require this $200 deposit into your account every month, because then they are welcoming you into the greater Chime ecosystem so they can try to make money off of you in different kind of ways. They have a new customer. But it may not be so great if you like your existing bank and you don't want to switch things up, and if you don't want to sort of have Chime Bank be your primary bank account. So that right there might be a deal breaker for some people. I don't know about you, but I'm not loyal to any particular bank. I'm going to jump around to whoever's got the best offers. So if there's somebody out there that is going to absolutely 100% guarantee that my credit score is going to improve because there's no possible way I can ever miss a payment for my credit card, then I'm probably going to switch. Like, to me, that's just a good deal. If I'm trying to rebuild my credit score, somebody that offers a 100% guarantee that your credit score is going to go up, that's kind of a no-brainer. Now, Chime Bank has done some preliminary studies. It's a brand new card, so it hasn't been around a long time, so there's limited data points. But according to them, the average user has seen their credit score go up by about 30 points on average within the first 3 months. Now, 3 months is a very short amount of time, so a 30-point increase, that's pretty impressive for only having the card for 3 months. So while there is a few downsides to this particular credit card, probably the biggest of which is this $200 direct deposit into your spending account every month, I think on the grand scheme of things, because this card functions fundamentally different than every other secured credit card on the market, it's still a fantastic deal. Gone are the days where you have to give that security deposit to the secured card and they just squirrel it away, never to be seen again. Instead, now it acts more like a debit card or a prepaid card of some sort, and there is no possible way to ever get charged any interest, and there's no possible way to ever hurt your credit score by using this card. You are guaranteed on-time payments with this card. So that's going to wrap it up for us today, folks. If you found this video useful, be sure to subscribe, leave a comment down below. I love hearing from you guys, and as always, I'll see you all again next week. Thanks.